Yuan Ye spends a lot of time on his guitar, but perhaps more time on his tablet, checking his latest investment, something all of his friends are talking about.
He just tell me that, there's something that's really easy to use and you can put your money in and withdraw anytime. And it's the interest rate is really high, surprisingly over 5%. I heard that, I said, wow.
Yuan is an early believer in new financial products that Chinese tech giants are offering. He invested his savings, almost $17,000. Economists say traditional Chinese banks offer around 0.35% interest on deposits. Internet giants like Alibaba, Tencent, and Baidu are now offering financial products that promise between 6 to 8% interest. Consulting firm McKinsey says by January of this year, 1 to 3% of all Chinese deposits had migrated to internet finance. This has shaken up the traditional banking sector. The main advantage the internet giants have: a treasure trove of customer data from past purchases.
The way that they are able to lend products in such a tailored way is quite revolutionary. They are able to understand customer in a very micro manner, right? So they are able to distribute products in a way that are quite specific to the needs of the customer. Those are actually banks have never thought about that before.
Alibaba started the new business model last summer when it offered its existing Alipay customers a way to invest the money left over in their accounts. It's Alibaba's first foray into financial services. Tencent and Baidu then copied the concept. The internet giants have tapped into the mass market, which was largely ignored by traditional banks. But there are still some skeptics.
I'm concerned about its safety. Your password and personal messages may be compromised.
I still trust banks more. They are more stable because they are supported by the state.
According to McKinsey, the potential customer base in China for internet-based financial products is at least 300 million people. They say regulators are watching closely for potential risks to investors, but industry experts say Beijing is also looking at potential positives because these products may play into the country's push towards financial reforms. But is 6 to 8% interest sustainable?
We think it's not sustainable. We think it's something that these players would have to scale back later on. At the moment, there's a big hype to it, and these players are trying to attract users.
For now, Yuan is happy to take the risk because he sees his investment growing quickly and hitting a high note. Pauline Chu, CNN, Hong Kong.